Coming up in this show, I'm going to bring you my opening comments on the markets. Katie has trade planning with options. She's going to apply our charting with option strategies and bring you a very interesting approach to coin. Harvey's got stock sectors, and he's going to be teaching our charting looking at the airline sector. I'll show you our cycle analysis workshop, and don't miss this great special. You'll be learning to project in time, price, and direction. And I'll bring you my analysis of the stock market. I'll show you multiple time frame analysis in the S&P 500 and the VIX, and also be bringing you the daily stock index report. You'll be able to see our charts and indicators on there and what's available to our members on a daily basis.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week. And a look forward to what might happen in coming weeks. And hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market has been in a persistent decline over the past week, extending the correction that began at the beginning of April. Monday started to the downside as Iran attacked Israel with 350 drones and missiles, and only to be set back in what was really an ineffective attack as Israeli defenses, joined by other countries, really stepped up to protect it. Also, Tesla reported big layoffs, and that stock has been getting pummeled, and we turned bearish on it quite a while ago. And Apple, that moved down also as its shipments have declined, and that weighed on the markets. So we had the tech stocks really starting to give some downside pressure. Tuesday, Powell spoke, and it was a very choppy day. I mean, it really moved in both directions widely. And he said there's lack of progress this year in reaching their goal, and that recent data is not giving them great confidence, and it's likely to take longer to reach that 2% goal. Well, markets were not very thrilled about that, but again, they were trying to bounce, but really could not. Wednesday, ASML came out with a big miss on their earnings, and the semiconductors got wrecked on that news, and that weighed on the NASDAQ also. Thursday, Taiwan Semiconductor beat on AI, but then they warned on industry sales, and again, semis and tech stocks led to the downside. Friday was a wild night as Israel hit back at Iran, and in what was a very limited response, yet successful as we hear it, and the indexes overnight were down 2%, with big bond bids coming in and the oil soaring to the upside. But that settled down a lot overnight when people realized that it was not a huge attack on Iran and seemed to be very limited. And by the opening, the indexes had worked their way back to around unchanged. But the tech stocks remained very weak again, and those have been really weighing on the stock market again here on Friday. But the market is really mixed as the Dow is moving to the upside and the Russell's holding pretty well here on Friday. But after a very wild night, it's could just call it a much calmer day so far here on Friday, and pretty widely mixed. Right now, it's clear that the stock market has fallen and can't get up. And this came right on time based on our analysis that we projected many weeks ago. So far, it really nailed our first objective to the downside, with the market down 5.3% right now. That's right on the money in what we had projected. However, there's still a long time to go. And while we do expect the bounces ahead, and probably starting sometime next week, it'll be very hard for this stock market to get any real traction. We've added the resistance sell levels to our charts, but without a bottom having been set here, at least for the short term, those levels are still moving lower, and we'll be doing regular updates to those charts for our members. And the magnitude of and the timing of this downside says that there could be a lot more ahead. Our best case, and what we've been talking about as the most likely, was about an 8% decline in this correction. But still, it could be a lot worse, and I'll show you that coming up. For the week so far, well, the Dow is down a little bit for the week. The S&P 500 down over 2.5%, but the Russell and the NASDAQ were the weakest indexes, down over 4%. Bonds, 30s, they're looking like they are down only about 1.25 points. They've been kind of jumping around a lot, and the 10-year yields gained about 18 basis points on the week. Right now they're about 4.61%. They got up to about 4.7%. And we think that there's a correction coming in yields, or a bond bounce coming that should last for a couple of weeks. The gold market, gold gains strongly, another $44. We've upgraded our near-term targets to $24.75 to $2,500. Silver gains over 60 cents on the week, and now we believe, or still, that the near term we're going to see $30 or $31 in the silver market. Silver is way, way behind the gold market, with gold way up at new records, and silver still trading down about 45% from its all-time high. So silver's got a lot of catch-up to do, and we still love those miners, especially the junior miners, and can't wait for some pullback, which we think is coming, to be able to add to those positions. Dollar, small downside week, and it really looks to us like there's about a 2-week correction ahead in the dollar. And the oil market is giving us big warnings of a potential important top. And there's a chart update coming for our members on that Monday, and you'll be able to see it. But right now, just focus on $80.64. If it breaks that, it's a breakdown, and a major top will be formed. You want to see all of our analysis on the indexes and futures. Avi does a spectacular job of this every Wednesday in the Future Speak show, where we combine my analytical work in futures and indexes with his, and then he presents it in video form. And Future Speak has been around for nearly a decade, and it is one of our most popular shows, available to levels, member levels 2, 3, and 4. So please do consider becoming a member. All right, so that is the opening comments for this show. We've got so much that is coming on moving forward, so you'll enjoy it. Make sure that you do go to our website, look around, get acquainted. Sign up for level 1. I'll do a little demo on some of that coming up. Just 3 months for $45 for fantastic information on the indexes every single day. Plus, you're going to get just one of our most spectacular applications in there also. So you'll love it, level 1. YouTube, subscribe to our channel, click the notification bell. And if you like this video, of course, give us some thumbs up. That helps us. And on X, follow us at askSlim. Questions you have about anything that I present here, or anything on our memberships, on huge offerings of education and analysis, write to Matt at askSlim.com. Katie has trade planning with options. She's going to review coin and set up an iron condor, combining the askSlim charting style with option trading on the great Tasty Trade platform. And she's going to show you also how to open up an account at Tasty Trade, so you could trade options there, by going right through the link on our site. So make sure you watch that, and please open up a Tasty Trade account.
This is Katie with askSlim, and this is Trade Planning with Options on April 18th, 2024. Today I'm going to show a trade idea in Coinbase Global. First, our legal disclaimer: the options trades that I demo and follow up on are trade ideas. When I talk about closing, adjusting, or managing them, I'm simply educating around management techniques, best practices, theories around risk management and profit taking, and highlighting aspects of options trading that we encounter as we follow the trade ideas. This disclaimer is specifically related to options trading. For full legal information, please go to the askSlim website or email matt@askslim.com. The trade idea I'm going to set up today is short term, but just for a quick overview, let's start by taking a look at the weekly chart of Coinbase Global. We are currently late in the peaking phase of the weekly cycle. The reversal scout has just turned negative, and we have a weekly cycle timing window that begins next month. It runs from May 13th to June 21st. And now let's switch over to the daily chart. On the daily chart, we are inside the daily cycle timing window. We may have our short-term low here, but one bullish candle is not enough to confirm that low. In any case, it's important to note that we have broken below the cycle low support and we have a negatively configured cycle here. Therefore, we are not expecting coin to make a new high in the next cycle. I've created a resistance zone using this high and this current low. It runs from 253.76 on the top to 235.39 on the bottom, with a 78.6% fib up here at 266.83. We would expect coin to stall in this resistance zone and turn back down. Now do remember that if coin takes out this low right here, then that resistance zone will also move lower. Momentum is currently negative in this time frame as well, as shown by both the reversal scout and the slim ribbon. Earnings are expected on May 2nd, so this is going to be a short-term trade idea with an expiration date that will be before the earnings date. We are going to go over to the Tasty Trade platform. They are our preferred options trading platform. From the askSlim homepage, you can hover over the Marketing Partners tab and click on Tasty Trade, and that will take you to this page where you can learn more about them. And if you decide to open an account with them through our link here, that helps you with a bonus and also helps us. Now over to Tasty Trade. Since we have earnings on May 2nd, we are going to use the April 26th expiration cycle with 8 days to go. You can see the earnings date represented here by this purple ribbon on the platform. So let's open up that April 26th expiration cycle. Now do note that IV rank is high at 73.9, so that suggests a short premium strategy which will benefit from a contraction in implied volatility. I'm going to set up an iron condor because we are still inside the daily cycle timing window, so we could get a lower low, also expecting weakness because the next cycle is in sync with the weekly cycle timing window. But we are also expecting a move up into the rising phase of the next daily cycle. So let's start on the put side. Now remember that we had a 127.2% fib at 197.85. So let's sell that 197.5 put. Then on the call side, let's go and sell the 255 call, which is just above the resistance zone. Now this is a strangle and it uses almost $15,000 in capital. So let's go and buy further out of the money wings to define our risk, and that will make it an iron condor. That will also reduce our capital requirement. You can go as wide or as narrow as you like. I'm going to demonstrate a $10 wide iron condor. So that means buying the 187.5 put and the 265 call. This nets us a credit of $2, which puts our break-even points at 257 and 195.50. Let's take a look at the risk graph. Here it is. So what we want to have happen is for Coinbase Global to stay within our short strikes for the next 8 days. Our profit target is 50% of max profit, which is the credit that you collect. So I will update the options trade idea tracker with this trade idea. And we'll follow up again on this trade idea next week. As always, please feel free to reach out on Discord or via email to Katie at askSlim.com if you have questions or feedback.
Stock sectors. Arby's going to share analysis on the airline sector. Now, while we're believing we're in a negative condition in the stock market and in a correction, this is one of the sectors that is turning positive. He's going to show you why, and why maybe looking at this can put it on your radar as to when this correction is over, you might have a good sector to be looking for on the long side. So take a look at this.
Okay, so this is our stock sectors video for this morning on the airline category. What we have seen earlier this week is a bullish breakout to the upside in UAL post earnings, and that had us look at the sector ETF that we follow, which is the US Global Jets ETF. And what we will do in this video is first look at the Jets ETF and then look at the four major airliners that we follow here with UAL, AAL, DAL, as well as ALK. And after this video, you should have a clear understanding of where we believe we are in both the intermediate term and short-term cycle pattern. So let's go ahead and jump into it. Okay, so this is our both weekly and daily cycle analysis for the US Global Jets ETF, or the JETS. We will go ahead and pull up the weekly chart. Now, for those who are new, at the bottom of the chart, we have our cycle brackets here. These are all manually drawn on all of our charts, and they're simply a visual tool to help us to see the money flow patterns. And what's happening here is that we have a low that is due 4.8 to right around 6.3. This is also a basing cycle that is forming here with a higher cycle low versus the old low. This is a bullish pattern. To learn more about basing cycles and various types of cycle structures, certainly want to look at the cycle workshop. We do have a special going on, just as an FYI. What we see here in the Jets is that, as I said, there is a basing cycle forming, and we are getting ready to turn back to the upside here. Overall, we are looking for a move towards this 50 to this 61.8 fib from 2232 to right around 2309 here on the intermediate term time frame, as long as we're holding this now key low at 1905. If we go ahead and shift over to the daily, you'll see what's happening here on the daily chart. A very strong move here on the upside off of what was a key trough that we believe has now likely formed in the Jets ETF versus 1905. You will note that there was a bottom due right around the April to May time period. I have shortened these cycle brackets by 2 bars just for this slightly early low on the daily time frame, and now we are turning back to the upside. We have a positive cycle here with a higher cycle high and a higher cycle low. There are good odds of, at the very least, a test of that old high in the short term, and that is at 21.22. If it can move through that on a daily basis, we would be looking for a move towards 22 to 22.75, which is this blue zone right here in the Jets ETF. Okay, so that gives you a good summary for what's going on in the sector. Now let's look quickly at some of the major airliners. We'll first look at UAL, and you can see just a massive breakout on volume in UAL. And here we also had a really solid bullish base that was forming here with a higher low versus the old low. And this name also had a low due. A low was due 325 to right around 5.6. We have now broken up out of the base and confirmed that an important bottom is now in place in UAL. On the upside, you can see our levels here from 55.12 up to right around 58 quarter or so, which was this old swing high here in UAL. So overall, we will look at dips to be likely long side opportunities for a move back to the upside. Shift over to the daily chart. You will see here a higher cycle high, higher cycle low, positive cycle structure in place. And we have just blasted off on earnings. So if we were to see a dip here, we would be only looking to the long side, given that all of our indicators here have turned back to the upside. That is giving us a positive bias in terms of the trend. So we are looking for a move towards this level right here at 54.12 on a very modest flag post earnings. Okay, so that's what we are focusing on here in the UAL both weekly and daily cycle pattern. If we shift over to AAL, you can see that this is obviously a laggard. This is frequently a laggard. For all of us who have flown AAL, we all know we have all had, I'm sure, our share of difficulties with this airline. So no shock that that this is a laggard stock. There is a low that is due here as well. However, 4012513, we are holding perfectly at that 61.85. Note that there was also earnings here coming out on 425 in the pre-market. So we have to wait for earnings to get proper clarity here, but there are overall good odds that we are in what we would call as a bottoming phase here in AAL. On the upside, we will look for a move towards that 78.6 fib at right around 1543, and then we have this old high here at 1615. Shift over now to the daily chart. You will see that there is also a daily low to here, 49 to right around 418. We are turning back to the upside. Again, in the short term, we are looking for a move towards that 61.8 fib, right around 1484. If we go ahead and shift over now to DAL, we'll pull up the weekly. You can see that this is acting very strong. Now, this is really key. This is a very strong, what we would call a swamped cycle or a right-hand translation, where we have used up most of this cycle rallying. It's leaving a short window of time for a pullback, good odds of a move to higher highs in that next rising mode here. There is also a low due here, 311 to right around 520. We are looking for a move back towards 52 quarter and higher here in DAL. If we shift over to the daily chart, there is a daily low due here as well, 49 to 426. We are looking for a move up into this zone here, 5170 to right around 53.5 or so. So really strong action in Delta, and certainly one of the relative strength leaders in this category. Finally, let's go ahead and shift over to ALK. And you can see a very strong pattern here. We did post this on social media. Very strong higher low basing cycle that is now confirmed. We had a bottom due here as well, 318 to right around 513. We have turned up. We are looking for a move into this zone, 48, 45 to right around 50, 75 on the intermediate term, as long as this low holds at 40.07. And there was also a daily low that was due here right around the middle part of April. It formed its low and then it just blasted off on the upside. We are looking for a move as we have added in here, 46.90 to 48.70. Small dips we will look at to be bought for a move up into that target that I just highlighted. Okay, so that is a look here at the airlines. Okay, so that was our look at a mini stock sectors here on the airline category. You will see that throughout all of these stocks, we are early in rising phases on both the intermediate term and short term. Now, if you want to learn more about how we do this type of cycle analysis, please go ahead and take the askSlim cycle workshop. We have our biannual special going on here, so we don't offer this all that often, but I have to tell you, it gives you a fantastic feel for the market. I haven't seen any other style of market analysis that gives you this kind of level of feel and understands that sense of timing. With this process, we can forecast in terms of price, time, and direction. For those who have access to our trading desk service, you have seen us do it on a consistent basis for years. Are we going to be wrong? Of course. But we will be far more right than we will be wrong. And that's all that you can really ever ask of any process. So if you are interested in learning more about our cycle workshop, please head over to askSlim.com and click on the workshop button at the top of the screen. Thanks again, and I hope you guys have a great day.
Stock market analysis and projections on the S&P 500. Some important information for you that you can see, but make sure that you read this slide first. This talks about our approach to the markets and how what it means to you when you apply it, and the important aspect of trade ownership. You always have to make the trade your own. Stock market, boy, we got analysis coming up, but you got to look at this. I mean, this is just fantastic information, and you're going to learn to do analysis just like we do. You've seen the great work from our analytical team, and now you can learn our method of analysis, developed over 50 years. This is our Cycle Analysis Workshop Special. It took me 2 years to write and over 6 months to produce this workshop. There's 24 video modules, plus many tools for text videos that you'll be able to learn so much from. And you're going to get online lifetime access with no special platform required. You will never look at charts the same way as you did before. You'll be able to improve your directional decisions and project in time and price, which hardly any other analytical methods can do. And you're going to get bonus items from us. The first 15 people to invest in this workshop will get a collector's book, The Profit Magic of Stock Transaction Timing. This book has been out of print for decades, and it's the one that I read almost 50 years ago, from which our style was developed. And we have been saving many of these collectors' books to give away just at a time like this. And there's a new video coming, so there'll be 25 modules using intraday cycles for short-term swing trading. And our Level 4 members will get an extra $100 discount. So if you're not a Level 4 member, you might want to step up to that level. So this is a special $400 discount. It's just $897 for this amazing workshop. And again, an extra $100 discount for Level 4 members. For information, go to the top of askSlim.com and watch the video that's there in the sign up area. So just click the Learn More button and you'll be able to see the whole list of the video modules that there are in a free little video that you can watch to learn about cycle analysis. Or write to Matt at askSlim.com for information. This will be an amazing investment for you and one that you will always be pleased that you did. Thanks a lot for listening. Stock market S&P 500, multiple time frame analysis. We're going to look actually at the SPX and the VIX today. And you're going to see our daily snapshot at work. So some great analysis coming your way. Let's start out by looking at the chart of the S&P 500. So you're looking at weekly and daily chart. On the left, we always do multiple time frame analysis. It's important to us to be able to look at the dominant forces in the market as well as the shorter term. And even when we do analysis for intraday analysis, we always use at least 2 different time frames. So let's look at the weekly first. We have been looking at the corrective period and had this yellow area right over there for weeks and weeks and weeks, waiting for the market to tell us that it had turned over, that it was forming a top. Saying that through this whole period over here, it's been bullish, and you can see our reversal scout right over here. This is a level 4 proprietary indicator, moving to the upside and pushing the market up this whole time. This is money flows. This is money coming in from the intermediate and long-term holders that was pushing the stock market up. And now you could see right over here that it turned over and was telling us that the market had likely peaked. We had talked about a minimum of a 5.3% correction, coming right down to the intermediate 23.6%. Let's take a closer look at that, and you can see, as of this morning, absolutely nailed it right there. Now, we thought that the greatest likelihood was that it would decline 8% down to around these levels right over here. This is 48.37. This 38.2 level right over there is 48.20. So right in here was where we thought the most likely correction was, that would take you down to mid to late May or potentially out into early June. The daily chart actually points to around June 2nd or something like that. So we had thought it would be a 350 point to 500 point correction. You can look at our past videos for, well, a couple months, and we talked about that. And, you know, so far we've come down from 52.64 down to where we are right now, under 5,000. So that's about a 270 point decline so far. So we're really expecting a greater amount of that. So we're going to look for this as the most obvious level right over here, very close to 48.20. with a pretty good, probability that it gets down here. This is 46.82, and these are the extreme levels, and it would really take a decline much harder than we expect to get you down into this under 4,600 level right over here. This I would consider unlikely right now, while when we thought the possibility that the market would peak sooner, that was more likely. But now that the market extended longer on the upside, it limits the amount of time available, and it also raises the objective, the corrective downside objectives. So that takes us to the most likely here, closer to the 4,800 level. And when I look at the daily chart, and I'll just switch right over here, you can see this beautiful action. So each of these cycles, and for those of you that are brand new, on the bottom are the cycle brackets, and what those are is just a drawing tool to help us understand the energies of the market. If I look back at this cycle right over here, you can see that it shows you the dominant distance right over there, and the cycle's measured from low to low, and it gives you the average period in here when we set in these cycle brackets, and you could see the dominant cycle here and the dominant cycle here and the dominant low out over here, which is right around the end of May to the beginning of June, like points to 531 to 63, something like that. There's a weekend in there, so a Friday is 531 and the Monday is 63 right there, if you want to get really precise. So we're projecting that there would be a short-term low right over here. You could see these lines right over here. This is the low timing window for the short-term low as you get this first decline. Now look at the slim ribbon PO on the bottom. This is another one of our proprietary indicators, only available to level 4. This gives you the upside momentum right in here. And when it's green, the slim ribbon is positive and telling you there's upside momentum. And when you get an arrow, it tells you that it's likely you're going to get an upside resumption. And each one of those was just absolutely spot on when you look at that, and giving you the sense that you were in this uptrend. But that changed as it neutralized here. As you can see, get a little closer look there. And then has turned red as the momentum in here. So likely this is going to get a bounce. It'll get over the 75 area. It'll give you a down arrow somewhere over here, and it'll move lower again. We do not have an anchor point in here. In other words, I can't perfectly measure where the upside bounce is going to be. And I'm beginning to project what this looks like in here. So again, we talked about some bottoming happening somewhere in here. And then once we get an anchor point, I'll know exactly where these resistant sell zones are, and we'll be getting ready to sell them in a bounce for this decline. And again, we're projecting close to that 4,800 level out over here towards the end of May. These are what we call ideal cycles and ideal projections of everything works out as they should. And this is all based on probabilistic analysis, based on putting the sum of the evidence together on the way that we approach our analysis. So some kind of a bottom in here in the next week, then moving to the upside somewhere in here, hitting the sell zones right in here. Remember, it's listed declining because I don't have a bottom yet in here to really measure it from. And then once it bounces, then turning down again. And this is a problem area right over here. This is at the time frames, and I'm just going to blow this up right over here that you can see. When there is a downside alignment in the weekly and the daily, and both dailies right over here, and both weeklies over here, the minor and the dominant, when all four of those are lining up is the time period for the capitulations on the downside. That's when sellers become very anxious and sell them very hard. So that's why I say over here, looking at the weekly, it could get down under 4,700 because I don't really know what that capitulation is going to look like. If you want to look further back, let's just go back over here that you can see. This is the period where all four of them aligned on the downside last October. And we absolutely nailed the timing on that bottom over there. Also, as you could see, the bottom's right in here and the bottom right in here. And if you just look at this last cycle, right in there, and I messed that up, so let's just go back over here, and this last cyclical period right in here. So I'm looking here at that daily chart right in here, and you could see the momentum was negative right in here and pushing to the downside, just as we have right over here, momentum pushing to the downside. This last decline after the bounce into the sell zone, now this is exactly what I'm showing you will likely form coming up, took you from let's just say 43.95 down over here to 4100. So that was almost a 400 point break in there. Almost a 300 point break in there in just the last 10 days or so to the downside. That's that period of a potential capitulation, and here's where it is right over here into this period in May. It doesn't have to be 300 points, but it certainly could be, and if you get the bounce right to resistance at 5100, 300 points to the downside takes you right to 4,800 if it matched what we were looking at in that similar period over here. So again, momentum turns negative. Momentum turns negative in here with the slim ribbon. It is red right over here. The period of risk coming in here, the potential capitulation right over there. That tells you why we had looked at this as being this period of risk, why we expected a correction in here. But now look at where the low is here and look at where the low is likely to be here. This is a very positive structure, a very positive condition in the intermediate and longer term. That says to me that once this correction is over, we're going to get up here and test these highs later out in the year. So that's the highest probability. Again, this is probabilistic analysis. Even though it's an art form, there is very specific things that we look at, and it says that this correction is likely a correction in an ongoing bull market with higher prices to come next year. But in the meantime, there's potential pain coming here in this next, well, we'll just call it 4 to 6 weeks, where there could be some sizable decline. So that is a look at the stock market. Okay, let's take a quick look at the VIX. We had talked about an important cycle right over here, which was a 29-week cycle that was obviously to us going to make a bottom because we were looking for a peak in the stock market at the same time. And miraculously, well, maybe not, that really worked. And you could see the explosion in implied volatilities on the upside. Remember, VIX is a reflection of the demand for puts, or how much investors are willing to pay for insurance. And as you can see in here, they're really stepping up to pay for it. Now we have this projected up over here. It's very likely to get to the high 20s or higher sometime out in this late May, early period there, and then probably be done with that correction and the VIX beginning to come down. When you look at the shorter term right over here, it really calls for a decline sometime into this maybe third week of May period right there, maybe second week of May, and then another upside move of some significance out into that late May to early June time frame. So that's very much in alignment with what we're expecting. This period in here on the daily chart that we're looking at, which takes you out through April into early May, this is the period that we showed on the stock market on the daily chart on SPX that could be the bouncing period that we're looking for. And then when that's over with and the market begins to move down again, then you get another upward spike in implied volatility. So that is a look at the VIX and what very well could be setting up a choppy period just ahead for the stock market as it tries to bounce, tries to grope for a bottom, and then sets up another sizable wave to the downside and a big jump in implied volatilities likely still ahead. I want you to see what's coming up in here next, because this is just some more information that really enhances the work that I just showed you and the work that our team does. So watch this. Okay, so now let's take a look at the SIR daily snapshot Matt puts this out every day, does a fantastic job, and it's got some great information in there that I really thought it was worth sharing, and you'll be able to see what comes to our level 1 members every single day. So this is the daily snapshot right over here for today, 4/18, and we're just going to scroll down a little bit in here so you can get an idea what's in here. Matt puts out a technical briefing every single day. There's the S&P 500. You can see that, the NASDAQ right there with all of the key levels, key numbers, and the Russell right there. Not going to really look at that right now, but become a level 1 member. You can see that update every day. I showed you the charts on the S&P 500 already. When you look at that, those charts exist right over here. So you'll be able to see that and more because we've added in now the 2-hour chart right there with all that information and our proprietary indicators on the bottom. You can see the daily chart that I just showed you also right in there and updated. And here is the weekly chart right over there. So this is all included in there so you can get an idea. So you can look at the outlook in here for the short term, and Matt has all that information in there, looking at the pattern structure, the slim ribbon, the reversal scout. So this is for the shorter term, so it's daily and intraday charts that we look at, and you can see that is all negative, of course, right now based on the conditions of the stock market. Important to be able to always look at that and get an idea of if there is an alignment on that information. Intermediate outlook right over there, as you can see, and this is really where it's important to look at if you're a swing trader or investor, because this information gets to be really important. You can see on the weekly chart on the S&P 500, the pattern structure is positive, and on the short term, a pattern structure is neutral in there. So you have a reversal scout and the on both the short term and the daily. On the weekly and the daily, giving you this declining momentum conditions. So when you look at this, it really says that, you know, everything in here looks like it's a correction in an intermediate upward trend. So that's what we've been saying, and this is really reflective of that. So that's important. And if we look at the long term right over here, you can see also that on the long term, it's looking at monthly and weekly charts, and the momentum condition being negative over here on the weekly chart shows you that it's pretty likely that with all of this positive right over here, if you're an investor, then you get a pretty good sense right now that, you know, we're in a correction. These would have to just change pretty significantly to give us some indication that the market was in a bear market, but the weekly chart would have to turn into a negative structure, and that is just extremely unlikely right now. So that's a look at the S&P 500, and of course we have that on the NASDAQ and on the Russell also. Let's just look at this really quickly. Again, the charts are available there in the NASDAQ for you to see by clicking on that and see all of our analysis. And let's just look at these outlooks right over here. So this is the short-term outlook. As you can see, as expected, all of the pattern structures and momentum conditions on the daily and intraday are negative, and those that is what you expect to see during a decline and a corrective process going on in the market. Here you could see the intermediate, and again we're getting an indication that the pattern structure is positive, but the short-term daily charts and the momentum conditions on the reversal scout are negative. So that says it's likely a correction that's going on in a positively configured pattern structure. Again, that means that it is a correction. It's not very likely to be a bear market condition unless things would change very dramatically. And the longer term outlook right over here, you can see that the momentum on the weekly is negative, but basically everything else is positive. So for investors, this is very likely a correction in an ongoing bull market. We can do this again for the Russell right over here, but you're going to get the same type of information, so I'll save you going through that again. Become a level 1 member and you'll be able to have all of this. And I love this chart. I mean, this is really a great chart to be looking at because it gives you the particular index and you just read it across. Long-term trend condition, long-term momentum condition. These are all positive. This is really a bull market indication. The intermediate trend condition right over here, the Russell has turned neutral, but the other ones are still positive on intermediate trend. And the momentum conditions, of course, are negative. So again, all of this, looking at this longer term and intermediate term, gives us signs that we are in a corrective period. But now when you look at the short term for traders and the interdays right over there, that really gives you the sense of what's going on right now with everything being very, very bearish. Now, when we get into some upside movement in here, you're going to see these near terms turning bullish right there, and you'll probably still see this as bearish, and then you'll know you're in an upside correction of this downside move that we're in. And so these would be bulls, these would be bears, and that would be a condition that the market would very likely turn back to the downside. To get back into a very bullish condition, these would all have to turn bullish again, as we saw for so many weeks. So this is just a great way to look at the conditions of the market. Love that chart. Matt does an incredible job on this. As you see all of the charts available in there, and this is the daily snapshot for 4/18. And again, I really encourage you to become a level 1 member if you're not already, or if you're a member, make sure that you do go back and refer to this information, because it's just absolutely great work. That's a look at the SIR daily snapshot at work. So that was a look at the SIR daily snapshot that really gave you a sense for how we share a lot of information with our members. Again, you can become a level 1 member and get all that information. You get a sense to what our overall analysis here is in the stock market, and that is bounces are likely to come, and there's still a lot of risk ahead in this corrective period. You want to learn to do the work that we do, that you see Katie and Matt and Arvi and I do all of the time. You got to take our cycle analysis workshop. Take advantage of this $400 discount and just $897 for 24 plus video modules and lifetime viewing of this. You're just absolutely going to never look at stocks and never look at charts on stocks and indexes as you did before. So go to the top of askSlim.com, click the Learn More button, and learn more about this great workshop. Make sure you go to our website and get acquainted. Sign up for level 1. Get that great information that I showed you in our review of the stock market. On YouTube, subscribe to our channel. Click the notification bell. And make sure that you give us a thumbs up. Watch our member videos in the playlists and past shows. On X, follow us at askSlim. And any questions you have on anything I shared with you or on our huge offerings of education and analysis, write to Matt at askSlim.com. That wraps us up for the show. I want you to be so incredibly careful because it is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to the city and I'm going to do a city show.